All right. Hello, everyone. Welcome to another edition of Tip Tuesday. This is Jeffrey Nance here with you. And today's topic, we're going to be talking about seasonal holiday strategies. So, the first thing I want to do is to point out that you're going to hear things and you might see things on the internet, and you might think, oh, well, of course, it's on the internet. It must be true. And what I would encourage you guys to do is to make sure that you do your own research. So, one of the things that we'll talk about today is this idea of something that you might have heard of called the Santa Claus rally. And it's the idea that into December, people feel like buying, and that carries over into the market. And, December is a green month. So, in other words, historically, December is a month where the market goes up. And so people think, okay, well, I'm going to go buy some stuff now because that's what happens. Well, one of the things that we can do when we hear about things like that is to simply go and test that theory out. So I'm going to show you how to do that. We're going to take a look at that and see over the last 10 years whether or not December has been a month where the market has generally gone up. And then we're going to take a look at what I would consider to be a seasonal strategy and how to think through some different trading opportunities. Because some people will basically say, okay, you know what? It's Thanksgiving. We have a shortened week this week. We have regular trading today. We'll have a regular trading day tomorrow. Then the market will be completely closed on Thursday and then only open Friday morning. And then we get into December there basically, and they'll think, you know what, I'm just going to take this time off. I'm not really going to trade during this time, and that is an approach. Right? You can look at that and say, you know what, I've been trading for basically 11 months this year. I'm going to take a month off and not trade and just go enjoy time with my family or doing other things, and I will come back renewed, refreshed, ready to go in January. So I mean, guys, that's one strategy. One seasonal strategy is to take the season off. Now, obviously, there are pros and cons to that approach. One is you're going to miss some trading opportunities, but two, if you've been struggling, you can take away that stress in your life. The holiday season for a lot of people is stressful, and sometimes you can add to that. What I've found is that for most people, they do not trade well when they are stressed. So if you find that that's you, and you go, man, I'm kind of stressed during the holiday season, then it might be a good strategy for you to say, you know what, I'm not going to trade during this time because I'm going to be distracted. I'm going to be stressed. I won't make the best decisions. And my strategy is to just simply say, I'm not going to trade for a while. Now, the downside to that is that you're going to miss some potentially really good opportunities. The market doesn't tend to move as much. It doesn't tend to be as volatile, but it doesn't mean it can't move, and it doesn't always go one way or the other, as we'll see. So, one of the things that I would say for strategy number two for us is to consider short term, smaller move trading opportunities. Okay, so number one is take the season off or take portions of the season off. Number two is to do short term, small moves. So higher probability trades, shorter potential profits, but tighter stop out. So just remember, guys, if we're going to win smaller, there's got to be an upside to that. And the upside is that we're going to have very tight stop outs. So we're going to be looking at strategies which incorporate higher probability likelihood of working, and yet we're going to have a tighter stop out. So if they don't work, we're not going to lose much money, especially since we kind of think, well, I may not make much on this. In fact, that's what we did last night on our Monday night webinars is we looked at some strategies that were bullish because generally I think the market's still going to float up. I know we were down early this morning, but generally speaking, the market's going to float up this week. Still using that 5-day support, and then we get into some trades where we don't expect big moves, but we do expect them to move up and hit some exponential moving averages on top and things like that. So we'll take a look at what some of those strategies look like. I'll talk you through that. But that would, for me, would be strategy number two. Strategy number three is to really consider that you just treat the holidays as normal trading times. Like you go out there and you trade just the same way. There's still the same opportunities basically, and you just say, I'm not going to trade any differently. The holidays aren't going to really impact me. I'm not going to get freaked out by them. I'm not going to not trade. I'm just going to go out there and trade regularly. So anything that I would trade just, in February, March, April, May, June, July, August, September, October, I'm going to trade those things in November and December. And that's fine too. And what you'll find is that they'll probably be pretty good as well. So we have three different things. We can say, all right, I'm going to take a break, or at least a portion of a break. I can trade short-term, smaller moves, or I can just trade regularly, right? And go out there and look for opportunities that I would do any other time. So let's go out there and let's talk a little bit here about the idea of whether or not the um, Christmas rally is really a thing or not. Like, is that a thing? Is that something I should be really considering? Is there anything to that or not? And what we're going to find here, I think, very, very quickly, is that this is way more of a mixed bag than we would realize. So I'm going to bring up the S&P here, and let's just go look at it. So what I'm going to do is I'm going to go out here to a 10-year, and each one is going to be monthly. So what that means for us is that each one of these is set to a month. So each candlestick represents a month. So as I scroll from one to the next, we'll go out here. Looks like I actually went out longer than I meant to go out to 10. What did I do? Max? I might have done max. Let's do this because it's still too small. So let's do 10 years monthly. That's what I meant to do. Okay. All right, so now what we're going to do, guys, is just kind of notice where I am up here on the screen. I'm going to scroll over to December, and let's just see. Okay, well, 2014 for the month, the S&P was down. Now, again, notice not much. 11 points for the entire month. That's not much. All right, let's go out here to 2015. December was down again, okay, for that month. So, all right, so if we've been through two, so far there has not been much of a rally here. We've actually seen for December 2013, 2014, that the S&P was actually down for that month. All right, 2016, you can see this small candlestick here. It is slightly up. So two down, one up. All right, there's another one. Very, very small, very, very small candlestick. See, guys, right there, very, very small. So now 2 and 2. Oh, whew. 2018. Whoa. All right, that is a massive red candlestick. Certainly no rally there in that December. All right, so far we're up 2, down 3, with one of those being a massive move down. All right, over here, another small body candlestick up. So 3 and 3, 3 small moves, one massive down move. Over here, another small body candle. So 4 up, 3 down. December, 5 up, 3 down. And December, oof, another massive dark candlestick. So 5 and 4. That takes us into an unknown, which would be this December. So far, looking back over the last 9 years, we saw 5 small green candlesticks. We saw 4 red candlesticks, 2 small, 2 very big candlesticks. So what we can do very easily is when we hear about something like that is to say, well, is it actually true? Now, that does involve that we do a little research, but it was pretty simple and pretty easy to do. Put the S&P on a monthly chart, go back 10 years, and then just sit there and go and see what it did in December. And what you can see is, generally speaking, in December, it's been very mixed. So if you're thinking about, my seasonal strategy is to go bullish, then what I would say to you is, well, over the past 10 years, you've been right maybe half the time, but 2 of those times when it moved against you, it was massive. And none of those times have we looked at it and gone, wow, that was a huge clear candlestick. The market clearly moved up during December. That has simply not been the case. All right, so that's one, is to really look at that and evaluate whether or not something like The Santa Claus rally is a thing, or is it just something people have made up? Now, what we could do if we cared to, now remember, this is the most recent data, the previous decade. But I suppose we could go back even further and look back and see, well, what was it like 20 years ago? But again, guys, if something mattered 20 years ago, but it's changed, what we really care about is, well, what is it? What's happening now? How is it impacting my trading at this time? And what I would say is you get, again, very mixed bag. Slightly up 5 times, down 4 times, but 2 of the 4 down were really, really negative months. So keep that in mind. So the other thing that I would say is, all right, let's look at some of our short term bullish strategies here. So what are some things that we're looking at here? Let's go back to a quicker, shorter chart here. Some opportunities that we looked at. Let me just kind of go through some of these that we discussed last night. All right, so something like ARRY. Now it's not working this morning. The S&P is down some. That's a little bit of a bummer here. But something like this, where we're just expecting a move from here up to the 20-day, and that's only like a 90-cent move. Maybe we even get the highs of yesterday. Maybe we went a little high. Maybe it was that resistance, and that's why it's falling today. And we're looking at this later this week for a move from here back up to the 16.15 area, which again is about 70 cents. So not a big move, probably going to happen pretty quick, but it should happen. And here's the thing: if it doesn't work, if this thing doesn't pull up here at these EMAs, then we're going to stop out. So we're entering around 1540. We're willing to stop out around 1516. So let's just say we lose about 30 cents a share, but we're risking 30 cents for the potential for it to move up, say 70 cents. That's a 2-to-1 ratio, right? So that's what we call winning big, losing little. So if I make 30 cents once and I lose 30 cents twice, I'd still be up 10 cents. And I only got 1 out of 3 trades to work. So obviously that something like that is a good setup as far as a ratio of what I could get right and still be profitable. So something like that would make a lot of sense. That would be a good opportunity for you to do something like that and to consider that type of move. That's what I would look for. Again, like we looked at ON last night, ON is one of those where we thought, man, this has a high probability to work. You look at it this morning, you go, man, I guess I'm glad I'm not in that. This is not one that we would want to get into. Premise of our trade has been broken. This stock is not going to work. So we are not going to trade that this week. It would be out. We would not trade that. It looked great. It was a high probability trade, but it's not going to work. So I don't know why this stock is down as much. 2.5% is a really big move down. So we're not going to trade that. It was a good setup. It had the ability to work. It didn't work. Tesla is one that we looked at last night as well. We were looking for a $5 move up on Tesla last night. You guys can see that that was incredible, right? I mean, we absolutely crushed that one. So we got to. So again, you're going to see a mixed bag here, and that's what I'm saying, guys. You can basically look for some of these trades that are very particular setups. This is basically filling the gap, and that's what it did today. It's pretty amazing, really. It worked out amazingly well. Whether or not people were able to get in, it depends on how fast they got in this morning because it moves so quickly. And that's unfortunate. If we'd hopped in, maybe live trading hour yesterday, this still would have been the same trade we looked at last night, but we would have been in it instead of watching it work very, very well and not being in. So, but you could have been in ON yesterday. It wouldn't have worked. Tesla was amazing today. And sometimes that's the mixed bag, guys. You're not ever going to get everything right that you ever do. And so you look at it over the grand scheme of things. If I make, 8 trades, 10 trades already, how many did I get right? Was I able to win big, lose little? And if so, even if my ratio is not as high as I would like, if I get a Tesla, and I get an ON, I'm going to be ahead at the end of that day. And that's really what this is about. And then, of course, number 3 is just to trade regularly. So you go out there and you see, something like a flag pattern or something like that, and you want to trade it. You just need to make sure you're buying at good buy points. So one of them that we've been watching here recently is Rambus. And obviously, Rambus is just incredibly hot. You can see we traded it back here a couple of weeks ago. That worked out extremely well. Now you see a flag happening there. You got this massive move up. Well, now it's flagging again today. That's exactly what we wanted to see. This is fantastic. So again, if this thing were to move down again, pop up over here later this week, you were to play this as a flag back up here into the previous support area, which ought to be new resistance. That's still a great setup. So again, we got all three opportunities. You can say, all right, I'm just going to sit this out for a while, take a break, enjoy time with my family. Or you can say, you know what, I'm going to trade some really short but higher probability trades with very, very tight stop outs. Or you can say, you know what, I'm just going to go look for normal trades that I would normally do and just trade those as I normally would and not really overthink this as far as, things are different or they're, crazy because of this. Trading might happen on lower volume, but it doesn't mean the stock market isn't going to move. It's still going to move. It's still going to do things that are going to make a lot of sense more often than not. And so you might just say, I'm just going to trade regularly. That's going to be my thing just during the seasons. I'm going to make some money for the holiday season. That's what I'm going to do. And that's how I'm going to take advantage of this. So hopefully that helps give you guys some ideas of how to think through different things, some things that you hear that are true, ways to think through some, viable trading opportunities. And then also, just considering that I don't put too much emphasis on this being a holiday season. And I just understand that people are still out there actively trading, and I can just treat trading the same way I always do and go out and make the same trades I normally would, and that's fine too. Well, thank you guys for being on with us today for another edition of Tip Tuesday, and we will see you guys next time. And as I close, just make sure we are entering into Thanksgiving, and we want to make sure that we give thanks for all the blessings that we have. We are indeed a truly, truly blessed people. So let's go out there and give thanks and make sure that we are truly thinking of all the great things that the Lord has done for us and all the things that we have for which we ought to be thankful, and take some time out to do that and to share with others and enjoy this holiday season here. So Thanksgiving, then on into Christmas season and all that entails as we celebrate, obviously, the birth of our Savior. So thanks for being on with us today. We will see you guys next time.